And look, if you're a Bitcoin maximalist, Bitcoin doesn't care. You don't care. None of this matters to you, except for one point. The one point is there's $500 trillion worth of money locked up in the traditional financial system. And to the extent that this gets normalized and you can start to funnel money into 401ks at Fidelity, and if Goldman Sachs and JP Morgan start to handle this, hundreds of billions and then trillions of dollars are going to flow into Bitcoin, and Bitcoin's price is going to go from $16,000 a coin to $160,000 a coin to $1.6 million a coin to $10 million a coin.
Michael Saylor, a seasoned business executive and investor, is one of the most well-known figures in the crypto space. Saylor has spent a lot of time spreading the word about Bitcoin, the largest cryptocurrency by market cap, and has invested over $4 billion in the cryptocurrency for his software company. Saylor, a Bitcoin maximalist, devotes most of the interview to discussing the underlying principles of Bitcoin and how they inspired him to take action in August of 2020. The late 2022 events, however, have caused the industry's leader to worry for the sector as a whole. Saylor discusses 3 scenarios that, in his opinion, are the only way for the industry to move forward after the tumults of the past year in a revealing Twitter Spaces discussion with prominent crypto influencer Bitcoin Archive. Now, let's head over to where Saylor is having this conversation on Twitter as the business executive plots out the future of Bitcoin and the digital assets industry.
There's 3 paths forward for the industry. One path is status quo. We continue to twist in the wind while the SEC and CFTC pursue very slow enforcement actions against crypto scammers. And the problem with those actions is if you sue someone civilly and they're counterfeiting money, then they could just keep counterfeiting money to defend, and it takes 4 years before you get a result, right? That's one path. That has been the status quo for the past 2 years. And that's not a good path because the same crypto scammers that are using counterfeit money to defend in civil court are using counterfeit money to lobby in DC and try to corrupt the politicians and the political process and the laws. That was where we were before FTX's meltdown. I don't think we're going to stay in that status quo situation because I think people realize there's a lot of egg on their face, and they can't afford to take another 2 to 4 years or 8 years to clean up the industry. So that means we've been kicked out of the status quo to either the left path or the right path. The left path is very regressive. We're going to, I'm going to issue a memo, everything with an ICO, everything with a pre-mine, everything with a controlling foundation, everything that looks like a security, it all has to be shut down. And then that's carnage. 99.9% of the industry dies. That's like the asteroid smacking into the Earth 80 million years ago, and that'll just wipe out everything other than Bitcoin, right? Right. And by the way, that model is like institutional grade investors buy Bitcoin with cash from traditional banks. That's via registered traders. That's how MicroStrategy spent $4 billion to buy Bitcoin. We did it that way. That is the regressive path forward. And the progressive path forward, and this is an opportunity, Archie, and there's probably there's one person in the industry that has the ability to do this, and that would be the chair of the SEC, the single pivotal, most powerful person in the crypto industry right now. The chair of the SEC has the power to say, I'm going to give you a registration path for digital commodities. I'm going to give you a registration path for digital currencies. I'm going to give you a registration path for digital securities. And I'm going to give you a registration path for digital tokens. I'm going to define this is what they are. You've got, this is how you apply. If you're going to be, and I'm going to allow digital exchanges to operate trading these digital assets. If that happens, there is a path for 100,000 different digital assets, over a decade from now, not now, but you would have 100 assets, then 1,000 assets, then 10,000 assets, then 100,000 digital assets they would be trading on 24/7, 365 digital exchanges that kind of look like Binance or look like Coinbase, but especially they look like Binance. I mean, Binance is kind of like doing everything everywhere in the world, and so the exchange would look like that, but they would have to be regulated, and they'd have to be transparent, and those exchanges would have to, in essence, come public in the United States, disclose all their assets, all their liabilities, all their conflicts of interest, and then they probably have to divest themselves of their conflict of interest. Like you can't trade against your customers, right? You can't issue your own security and then trade your security. We can already see big organizations, BNY Mellon, Bank of America, Fidelity. They're already moving into Bitcoin trading and Bitcoin custody, and so that's happening regardless. If we come back to my three scenarios, the status quo twisting in the wind, or the regressive or the progressive scenario, in all three of those scenarios, Bitcoin is going to be traded and custodied with regulated entities, with banks, regulated financial players. You're going to get your Bitcoin through Block, you'll get it through a Coinbase that's a publicly traded, regulated company. You'll get it through a NYDIG. You'll get it through a Fidelity. You'll get it through a whatever bank. So that's happening regardless. If you get the regressive stance, you will have a small digital assets set of exchanges or crypto exchanges that trade, that'll have very narrow focus. They'll all be regulated and registered, and they will coexist with all the self-custody solutions for Bitcoin, and probably self-custody solutions for whatever other assets are registered. And then in the most progressive case, if the regulators decide to actually lean into this thing and give people roadmaps for all these other digital assets I just laid out, then you'll see a few of the strongest players cross the chasm. Like a Coinbase crosses the chasm when they delist and they don't list their own token, and they come public and they start to file registration statements. A Circle is crossing the chasm. It's possible for a Tether or for a Binance to cross the chasm, and get registered and get regulated. The question really is, how will the regulators approach that, and do they make that easy or hard? Like they can say, I'll give you an example of Ethereum crossing the chasm. Okay, everyone give up all their Ethereum that got it in the ICO or the pre-mine, and disclaim all beneficial ownership to all of your Ethereum and stop interfering with the protocol. And if you can prove that you did that, then maybe it's a commodity. If you can't prove you did it, well, then disclose everything you've done and become a security, right? And so it's possible to cross the chasm if the regulators create the transition mechanism. And so really this comes down to, what is the SEC going to allow? Because the SEC is they're going to set the tone for every other regulatory agency in the US, and that'll set the tone for every regulatory agency in the rest of the world. And look, if you're a Bitcoin maximalist, Bitcoin doesn't care. You don't care, right? If you self-custody, run your own node, and you're Bitcoin only, none of this matters to you, except for one point. The one point is there's $500 trillion worth of money locked up in the traditional financial system. And to the extent that this gets normalized, and you can start to funnel money into 401ks at Fidelity, and if Goldman Sachs and JP Morgan start to handle this, and if Bitcoin starts being viewed as a neutral, permissionless, non-sovereign store of value, uncorrelated asset, then the way it matters to you is that hundreds of billions and then trillions of dollars are going to flow into Bitcoin, and Bitcoin's price is going to go from $16,000 a coin to $160,000 a coin to 1.6 million a coin to 10 million a coin.
How long do you think it will be before digital assets finally have the necessary oversight? Leave a comment with your ideas below, and we appreciate you tuning in to Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.